Hello traders and welcome to Swing Trading the S&P 500 ETFs. As a reminder, trading does carry significant risk and all information in this video is provided for educational purposes only. It is not offer or recommendation to trade futures, stocks, options, or Forex. Now let's go ahead and switch to the SPY ETF. So here is the SPY ETF contract on a daily time frame. And now we can let's go ahead and take a look at a weekly here real quick. Again, you have pretty much all the data that you need there from the daily. Let's go ahead and go back to the daily here. Yeah, pretty much all the information that you're going to go ahead and need here from the daily. Again, we're kind of in uncharted territory up here. So pretty much the same thing for this ETF. What we're going to go ahead and do now is diagram this market here as well. Go ahead and highlight some of these daily key swing points. All right, so we have a high there, another high through there. And again, we're not going to go too far back. You do have some more gaps just because it's a ETF here, so it doesn't take overnight price into account. We do have a low through here as well. You can see some lows all the way through there, so we'll go ahead and highlight that. Let's go ahead and go down to a hourly time frame once again, and you can also use a 240-minute time frame. We're going to scrunch this up here, and we're going to go ahead and go through. We have a key level there, and again, we're going to go ahead and change the color so we can identify which time frame one is on over the other. So we have a key high. Let's go ahead and put that at extreme of that candle here. All right, we have a key level through here as well. As a matter of fact, let's go ahead and copy and paste this level. All right, you can see some respected there. You can see it almost came back down and respected it again. Just a couple of ticks off. As a matter of fact, we'll go ahead and move this up to capture this breakout level. This looks a lot better, and it's a little bit closer to these lows here. Let's go ahead and highlight some levels through here as well. You can see we had a fake out that came right back down, respected it as support, so we'll go ahead and highlight that. And we're pretty much done here. Let's go ahead and go back to the daily. Now back on the daily here, again, we're going to look for any type of confluence that we can go ahead and use here, whether it's Fibonacci or trend line confluence. Go ahead and highlight this trend line right through here. You have two touches there. A little bit more, a little too steep for my liking, but nonetheless, we do have a couple touches. We'll go ahead and highlight that. As far as weighting, I don't know, a scale of 1 to 5, 5 being a very important level and 1 being the least important, I'd probably give this trend line probably a 2. Now let's go ahead and take a look at the larger Fibonacci here. We have to go all the way to the highs. Do have a confluence a little bit with a 23.6, more specifically with a 38.2. So I'm going to go ahead and highlight this 38.2% retracement. Again, that's a key level I want to go ahead and watch. I'm going to take a smaller Fibonacci from this key swing point here all the way to the highs. Do we have any type of confluence? A little bit of 38.2, but more specifically a key level here with the 61.8. So another level that I'm going to go ahead and highlight because we do have confluence here. Again, these are zones here. All right, so you're going to see sometimes you'll see some difference between the actual level and a Fibonacci here. So again, just looking at the zone, if once price gets into this, we get solid price action, then that is going to be something I want to go ahead and trade because we have confluence there. Now we have our levels set, and it's really on us to go ahead and sit on our hands and wait for these swing trades to come back and fall into some of these levels here to go ahead and trade. Now you can see here that we do have if we came back to this one area here where we retested this highs and you have confluence here with the trend line, that may be an area that you want to go ahead and trade. But typically what we're looking for when we're looking for price to come back to these levels is, again, price to come back and then give us an opportunity, some type of candle like you see here, to go ahead and get long. So let's go ahead and take a look at this candle here on a lower time frame, because once you get into these zones here, we want to see on a 60-minute time frame or even a 15-minute time frame that we do have support here at this area. So we're going to go back and look at this level here at the 10th of December. Let's go ahead and look at an hourly time frame first. All right, so we have the 10th of December here. And you can see that on the hourly time frame here, we definitely had key areas of resistance. You can see we had a breakout and then it acted as support, came back, acted as resistance. Then we had a gap up and then a retest of this level here once again. So prior to this action here, we actually had multiple times, 1, 2, 3, 4 times where price actually respected this area and actually gapped above it. Now coming into this area, as you can see, we had a candle here with beautiful rejection. So you had price action and you had immediately went into a little bit of drawdown, but then you came right back up. You had another hammer print here. So you had a hammer, and this is actually more of a true hammer here, printed, giving you a slightly higher low, indicating some strength here in the market. And you can see the market really took off here at this point. So just putting this all together, we highlighted this area here. At the time, we probably had this as the key high, and then we had this as an hourly level here, as we explained. Price gapped up above it. Now we're looking for an opportunity to go ahead and go long. It comes right back to this key level here. We have a hammer candle print, another hammer candle print here. If you didn't get long here, you actually had a better opportunity to go ahead and get long here. And then you can see the resulting action here. So you're using the higher time frames to find key levels, and then you're using the lower time frames to identify momentum in the market. Again, so you have the key level from the higher time frame, and then on the lower time frames, such as a 60-minute, and we'll look at a 15-minute here, you want to see price coming back into these levels. You want to see appropriate price action to kind of support your thesis here that you want to see higher prices. You come back into this, you see a couple hammers, and then the market is off here. Now in this case here, if you took a trade like this, where would you go ahead and put your stop? In this case, you'd actually have to go, I would say, beyond the gap here, because price could certainly come back and retest the gap, and you'd probably have to put it beyond these lows right through here. If you wanted to go ahead and put it here, that's perfectly fine here as well, but I would recommend putting it just beyond these lows that you see here. Now let's go ahead and go to a 15-minute time frame for another opportunity to maybe tighten up your stop here, tighten up the entry and get a better entry. So again, this is the price action that we just saw in a 60, and in full disclosure, I prefer looking at the 60-minute time frame to go ahead and position my trades and look for price action there. But you did have some rejection through here, and quite honestly, on a 15-minute time frame, if I'm just looking at this time frame, this bar itself would not be enough to go ahead and have me position a trade. You do have a little bit of an inside candle here, which is more of a continuation candle, but didn't actually continue, actually failed here. But what I do like is this next candle here, which actually prints a hammer. This is right here at the close. You have confluence here. You have a, again, slightly higher low here. You have confluence with a level that you see here. And you have a hammer that's printing. Again, another inside candle, as you can see here. And you can see it failed here in the past. This is actually right here at the end of the day. And I'm not opposed to actually taking a trade here at the end of the day. As a matter of fact, I believe there's a statistic saying that if you opened a trade here at the end of one session here in the S&P and then closed it at the open of the next session, that you actually would be up money. So for instance, you'd open a trade here at the close and then close the trade here at the open of the following day. You can see you would have made money there. And the same thing here, you go ahead and enter a trade here at the close, close it at the open or around the open of the next day. You can see it would have worked out there. See if there's any other examples here. Again, actually here, if you would have closed here at this session, you can see, or opened the trade here and then closed it at the beginning of the next session. You can see the kind of gap that you would have there. So there's certainly a statistic for that. And you can see here, this would have been a great opportunity to go ahead and open that trade there and then close it on the next day, or even, again, you're swing trading here, so you certainly go ahead and hold it. You can see how this one paid off. So this signal, again, wasn't the best signal to go ahead and take advantage of. However, this signal was certainly ideal. Now let's go and take a look at another setup here. Let's go and go back in time here. You can see that we had some highs through there, and then we broke above the highs, and at this point we'd be looking for a pullback to go ahead and get long and retest these highs. Now you can see as we move forward here, we come back and we do indeed retest it there, and this is going to be on the 20th of November. So let's go ahead and go down to a lower time frame to see what an entry would look like on the 20th of November. So again, we have a highs here that we would have had certainly had a level drawn, even a level drawn from down here. And you can see that we pulled back into this level, and on a 60-minute time frame, you don't really have any opportunity here to go ahead and go long. As a matter of fact, you can see this candle here was not a very bullish candle and didn't really give you an opportunity. But when it came back down and retested these levels right through here, as you can see here, came right back and retested it. We had a beautiful hammer candle. We had a gap down, another hammer candle to go ahead and take advantage of. And then if you were very uncomfortable about getting long there, as soon as it breaks those highs here, you did have an opportunity to go ahead and get long. Again, we broke up, came back down, retested the highs here, and then started trading off. Now this would probably look a little bit better on the MES chart because you have overnight trade here to go ahead and take into account. But on the ETF, you certainly had an opportunity here to go ahead and get long. Now let's go ahead and take a look and see if it looks a little bit better here on the 15-minute time frame. Alright, so it wasn't the cleanest setup there on a 60-minute time frame, but you can see that we came back to this level and actually had a beautiful setup there. We had a doji candle, as you can see. Actually, a couple doji candles, so you can see momentum lost just in these two candles right here. And then had a really nice bounce off of that, then actually a gap up and made new highs. But if you went ahead and waited for this retest here once again, and again on the 15-minute, you had a beautiful long-legged hammer candle here to go ahead and take advantage of. So again, just putting it all together here, you start from the daily time frame, and you go ahead and find these key levels on a daily time frame, and then you use the 15-minute or the 60-minute to find price action entries here. So again, find the key levels, 15 or 60-minute, wait for price action to show momentum loss, and as soon as you show momentum loss or any type of reversal in the market, to go ahead and execute the trade. Now this first trade could have certainly made money on it, but you would have to cover it in the next few days. This next trade was a pivotal low here, and you can see it pretty much nailed the bottom here, and it was a key low for the month of December, and then the end of December we pretty much finished up here at the highs. So I hope you found that helpful. Try to keep it as simple as possible. Try to keep your charts as simple as possible. Again, find those higher time frame levels and then execute on the lower time frames for some excellent swing trades, whether it's on the ETF or the MES contract. Thank you for watching this video. I hope you found it helpful, and happy trading.